Hello, fellow traders, and welcome to another comprehensive market overview, where we will delve into the latest economic developments and key technical insights across major assets. Today is February 19th, 2026. Before we proceed to the detailed chart analysis, let us first review the economic calendar to understand the macroeconomic influences shaping the markets today. From the Asian session, Australia reported weaker employment data than anticipated, which could weigh on the Australian dollar, while the unemployment rate remained steady near 4.1%, providing some stability in the labor market picture. Today's key U.S. events include initial jobless claims, which provide insights into labor market health. The Philadelphia Fed Manufacturing Index gauging regional manufacturing activity, pending home sales reflecting housing sector momentum, and crude oil inventories impacting energy markets. Several Federal Reserve members will also speak today, delivering their views on monetary policy and economic outlook, which may spark increased volatility, particularly during the U.S. session as traders react to any hawkish or dovish tones. With the economic calendar now covered, let us smoothly transition to the charts, where we will examine the technical setups for the major currency pairs and assets. Looking at the EURUSD on the 4-hour time frame, the pair remains firmly below the 100-period moving average, a key technical indicator that underscores the prevailing bearish structure in the market. The price is currently approaching the important support level at 1.1767, a zone where buyers might step in to defend against further downside. If this crucial 1.1767 support level holds, we may observe a corrective bounce to the upside, offering short-term relief. However, a break below 1.1841, combined with failure to reclaim the 1.1818 to 1.188 resistance zone, would reinforce the dominant bearish bias moving forward. Now take note of the RSI indicator displayed below the chart, and observe how all key levels are clearly highlighted, giving us a clear view of the current momentum conditions in the EUR-USD pair. Shifting to GBPUSD, the pair has decisively broken below the February 6th low, confirming bearish momentum, and it is now trading near the 1.3479 level, testing lower grounds. The market conditions for GBPUSD are extremely oversold at this juncture, suggesting a short-term bounce could be on the cards for mean reversion. Nevertheless, the overall structure stays bearish as long as it remains below the trend line and moving average. Observe the RSI oversold animation on the GBPUSD chart, which vividly illustrates the extreme oversold territory, highlighting the potential for a temporary relief rally amid the bearish backdrop. For USD JPY, the price has broken above the range resistance in a bullish development, and it is now advancing toward the 155.59 target, gaining upward traction. Importantly, the previous range low at 152.28 is now transitioning to act as a pivotal support level, providing a foundation for the ongoing move. As long as the price manages to hold above this breakout zone, the possibility of bullish continuation toward higher levels remains very much intact for USD JPY. Let us highlight the breakout zone clearly on the USD JPY chart, emphasizing its critical role in sustaining the bullish scenario ahead. Turning to gold on the 4-hour chart, we see consolidation developing near the 100-period moving average. While momentum on the RSI has reached 55, but lacks the conviction for strong continuation higher. This price action suggests that a complex corrective structure may still be forming within the consolidation, warranting caution before committing to directional trades. Observe the simple AB corrective wave animation on the gold chart, which illustrates the two-wave correction pattern emerging in this phase of market indecision. For the SP500 on the 4-hour time frame, the RSI near 54 indicates mild bullish momentum building within the range structure currently in play. Overall, the SP500 market remains entrenched in consolidation mode, patiently awaiting a decisive breakout to signal the next major directional move. Regarding Bitcoin on the BTC USD 4-hour chart, it was recently rejected from a major supply zone, leading to renewed selling pressure. Unless the price can muster a break above the descending trend line, the downside pressure is likely to persist, keeping bears in control. Pay close attention to the $60,000 key support level highlighted on the BTC USD chart, as it represents a critical threshold for any potential reversal. In summary, markets continue to remain highly reactive to incoming U.S. economic data, dictating short-term directional biases across assets. Always trade with strict discipline, implement proper risk management techniques to protect your capital, and patiently wait for high-probability confirmations before entering positions. Stay sharp and vigilant in these dynamic markets. Thank you for joining me, and I will see you in the next detailed analysis.